Bajaj Finance stock has seen a bruising collapse following the outbreak of COVID-19 and the consequent containment measure of nationwide lockdown for 21 days. The stock price of the second most valuable NBFC has fallen 50% from its 52-week high levels. In our ideas for profit today, I will discuss whether investors should avoid this stock during COVID-19. Well, even after the recent steep fall, Bajaj Finance has been one of the biggest wealth-creating stocks, generating 43% compounded annual returns or growing more than 75 times in the past 12 years. Now, the performance comes on the back of an enviable track record of growing asset book by 42% CAGR and pre-tax profit by 62% CAGR in the past 12 years. Now, while the lender's overall performance has been good so far, the Q4 pre-earnings release and the management commentary do indicate that the nationwide lockdown and the moratorium provided to the borrowers by RBI will have a significant adverse impact on its business and financials in the near term. So shouldn't the sharp price correction be seen as an opportunity to buy the stock? Well, the answer is no. We at Moneycontrol Research do not see Bajaj Finance regaining its past glory in a jiffy after the crisis abates. Now, the past earnings growth of over 35-40% looks unsustainable over the next few years as Bajaj Finance stares at a fierce competition and consumer down cycle as well. Now, despite the sharp correction, stock's valuation is still quite rich, and the business risks beyond COVID-19 are not getting adequately factored in the current stock price. Now, its loan book had started showing signs of moderation even before the outbreak of COVID-19. Now, for instance, the lender's loan growth in the consumer durable financing to businesses had also slowed to 7% year-on-year in the December quarter, mirroring the consumption slowdown in the economy as well. Also, the management sounded quite cautious on the unsecured lending, the auto financing, and the self-employed borrowers as well. Now, despite all of these notes of caution, shares of Bajaj Finance ended up quite higher after it released the December quarter results as well. Now, that is because most of the investors buy growth stocks, assuming that high growth will continue forever. But the problem is that it may not. Now, Bajaj Finance's assets under management increased by the slowest pace in past 8 quarters as it lost 10 days in the quarter during the lockdown. Bajaj Finance also remains highly vulnerable to the prolonged lockdown, and we do see loan growth moderating further as management's focus shifts from the growth to risk containment. Now, it may also not be possible for the company to grow its asset or loan book over 35 to 40% as seen in the past as well. Now, with disbursements in many key segments like the consumer durable financing coming to a grinding halt, we may see a speedy rundown in the asset book as well. So overall revenue growth will come off with fallen loan growth, and margins too are expected to contract. Bajaj Finance will make an accelerated provision against large accounts as well as make one-time provisions for the potential impact of COVID-19 in Q4 FY20. Credit costs undoubtedly will rise. The company sees credit costs rising by 80-90% year-on-year in FY21 if the lockdown extends till mid-May. Now, to mitigate the impact of falling revenue and high credit costs, management targets 7 to 8% of reduction in the operating costs through no new branch additions, no incremental or replacement hiring, and freezing other promotional expenses as well. Now, while cost containment measures will definitely provide earnings cushion in the near term, they will adversely impact growth in medium to long term. So what should investors do right now? Well, investors need not quickly jump the gun and call it the end of Bajaj Finance story. The broader slowdown and the COVID-19 impact will moderate earnings growth for sure. At the current stock price of about 2,300, Bajaj Finance is trading at 3.7 times FY21 estimated book value, which is still quite a significant premium to many other NBFCs. And Bajaj Finance stock may see further downside of another 20 to 30%. So investors should avoid the stock right now and can look to buy only on significant correction.